Good morning, everybody. Hey, welcome to Thursday. It's Jobs Day, November 4th, as we look to see what the Fed had to say yesterday and what the jobs unemployment looks like today. We'll have that and more when Dave joins us in just a moment. But before we do, let me just remind you that we want you to have the retirement you always dreamed of. And to do that, we've developed our core retirement design so that you can do just that, plan for the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your appointment. And let's walk through that process with you. Hey, with that, looking forward to our conversation with Dave coming up next.
Beebs is there. Morning Dave is here. It's 8:39 now, 21 before 9. Time to check in and see how your 401k and IRA are doing lately based upon yesterday. Not half bad, as a matter of fact, and a little bit of a pleasant surprise because the Fed actually appeared to say just about everything right from investor standpoints yesterday. Let's go down and analyze it all with Phillip Statler from Statler Financial Services. Phillip, good morning. How you doing?
Good morning, Dave. Hey, doing well today. Got some good numbers out. We ended up yesterday. I mean, what more could we ask for, Dave?
Offhand, I can't think of too terribly much to set the table. We had another set of 3 records yesterday because everything was up. Dow went up 105 points. That's 0.25%. In today's world, that's basically a routine day. Standard & Poor's was up about 0.2% to a new record. And the NASDAQ went up by a full percent, up 162 points. And a lot of that uptick, almost all of it, as a matter of fact, came about 2 p.m. when the Federal Reserve announced their rate decision, which wasn't anything, but it looks like Chairman Powell kind of threaded the needle and said all the right things to everybody because the stock market, just all 3 indexes, went straight up after 2 p.m., didn't they?
Yeah, it really did. You know, I've actually looked through some of the stuff this morning in an article that I was reading, and they did. They finally have laid out a path, right? They've been saying we're going to taper, we're going to taper, we're going to taper, but never gave any details of how that was going to work and what they were going to do. Well, now Powell did come out and say, hey, we are going to taper. It's going to happen this month. And this is what we're going to do. We're going to reduce the amount we're spending on treasuries by $10 billion. And we're going to reduce the amount we're spending on mortgage-backed securities by $5 billion. That's a total of $15 billion. Now, like I was saying before we went on the air, Dave, out of $120 billion, is that really a big deal? Are they really taking that much money supply out of the system? I just don't see it. And so the stock market really liked what they heard, and they jumped on it and kept things moving forward.
And I think the other thing that probably gave it, especially the interest-sensitive NASDAQ stocks, a boost was the statement said, overall, we remain comfortable with the view that our first rate hike will come at the end of next year in the 4th quarter, which you and I would end up saying, it might be holding off a little longer than you should given the inflation situation, but given the sensitivity many stocks have to interest rates, knowing they got a full year before they need to worry about an interest rate hike that's actually mandated, for lack of a better term, that was pretty much all good news for the interest-sensitive stocks.
It definitely was, Dave. And then the other thing that the Fed came out with yesterday, and this is, you and I don't necessarily agree with them on this, is that they still believe that the inflationary period we're in right now is transitory, meaning that eventually prices will come back down. Now, I just don't see that happening. I think more people disagree than agree with them on that fact. But that seems to be the route they are taking, that this is transitory. It may last a little longer than they first expected. They did throw that out there yesterday, but it's not going to be here forever. And that probably by the 2nd or 3rd quarter next year, we'll start to see that inflationary stuff start to get some relief.
I think they're a little optimistic on that front. Don't you agree?
I definitely agree, Dave. My fear is it's not transitory. I'm afraid it's here to stay for a while.
Well, this is kind of like a presidential court deposition. It depends upon what the definition of transitory is. We've had 10 years of no inflation, so 5 years of hyperinflation would just average things down to normal, wouldn't it?
I don't like your thinking, Dave. I don't like your thinking, everybody.
I'm trying to translate. No original thought whatsoever. Yeah, transitory is a term that can be defined any number of different ways, but basically it's almost a split vote. All the economists are saying bull hockey, it's not transitory, and the bankers are all saying it is. And we'll find out. We start out the morning with a bunch of macro reports, and depending upon which side of the fence you're sitting on, they're all good. If you're not on one side or the other, there's kind of a mixed bag. Jobless claims hit a new pandemic low, 269,000 first-time jobless claims. We're now in the neighborhood of a fully functioning economy. They just aren't changing jobs all that much. And the continuing claims number also edged downward from 2.15 to 2.1 million, but still, we pretty much everything is coming up roses on the employment front.
Definitely looking good, Dave, when we look at those numbers. Now we just need people to go back to work. I don't know if they have that number anywhere, but that would be a good number. You know, how many people are going back to work that to fill these job spots that are open? It's great that we're seeing less and less people file for initial claims, but we need more people to get back into the labor force.
Well, maybe the unit labor cost might attract a few of them, because that was the one that I was saying, depending upon which side of the political fence you're on, this is either good news or not good news. Unit labor costs last quarter were expected to rise by like 7% as employers raised wages based upon the new minimum wages, and just because they needed to attract workers. Instead of 7%, wages went up by 8.3% last quarter in terms of unit labor costs. Like I said, if you're on the side of saying we need better wages, well, we're getting what we asked for, aren't we?
We are, and let's just say we've got some wage inflation that's causing the inflationary number to go up too. It is because we're having to pay people more, supply and demand. We need people to work. We're having to pay them more to come to work. And I want to contrast that, Dave, to what that number was for the second quarter. Second quarter unit labor costs increased 1.1%. And you contrast that to the 8.3%. That's a huge, huge increase for the quarter.
Absolutely. When you start seeing McDonald's franchises advertising for $20 an hour paychecks, I think the price is going up by a tinge, right?
Yeah, you're not going to get, a Big Mac for 99 cents.
Probably not. The other side of the employment front, and this is bad news all the way across the board, non-farm productivity in the third quarter, it was expected to go down, which I was kind of confused by, but it went down more than expected. They expected a 3.1% decline in productivity. It actually went down by 5%, so we're paying more and getting less.
Yeah, that's never a good thing, is it? When we pay more and get less, that's we don't like that. I will say this, though, Dave, as I look at all the macro stuff you and I have talked about, because it's been out now for about almost 20 minutes, it has not affected really the indexes a whole lot this morning. If anything, we're seeing start to retreat a little bit off of where they were when you and I first got on the phone.
All righty, and after another up day yesterday, a little bit of a flat day today wouldn't surprise me all that much, maybe even a profit-taking day, which I keep waiting for and I'm not seeing. Earnings season also going on. We got a running ton of them out, and a lot of big pharma names that we never heard of until the epidemic broke out, right?
That's right. We had Regeneron Pharmaceutical and Moderna both come out. Regeneron is the one that came out with that cocktail of antibodies to help treat COVID-19. They had strong sales because of that, and they beat by well over $5 a share, came in at $15.37 a share, revenue ahead of forecast. And so they're getting a pretty nice boost today, up 2.5% before the market opens. And it will be not quite a new 52-week high, still about $20 away from that, but high price stock anyway. Then we had Moderna, the other end of that spectrum. They're having a little bit of an issue with getting their booster approved, getting their child vaccine approved. And so
memory serves, the booster's been approved, but they had an issue with administering it to kids. So right now, Pfizer's the only one that's got CDC and FDA approval to administer it to the kids.
That's right. And let's remember the other thing. I think I'm right on this. Moderna still hasn't gotten full approval. They're still operating under the emergency approval.
I think you're right.
They had no Pfizer's the only company that has actual approval from the CDC and the FDA. So Moderna, obviously, because of some of that stuff, is having some issues here. They had a shortfall on both earnings and revenue. They were expected to earn like $9 a share. They came in at $7.70 a share. And they revised downward their full year outlook. So you can know that that's not going well with them today. They're down almost 14.5%.
Wow.
Yeah.
That's a first class tanking.
Yeah, that is definitely, I got to think it's my big loser for the day. I may have one or more that's close, but I think that will take the cake when it comes to the big loser.
I think in reference, they probably, I bet you they were right close to a 52-week high before the guidance change. Am I guessing on that?
And no, you are not right. They were way off. I mean, their 52-week high was almost $500 a share. They closed yesterday at 345.
Oh, wow. I figured everything was coming up roses for them until they didn't get the approval as fast as they thought they were going to.
No, they took a big dip earlier this month. And then even before that, it's continued to be an issue for them.
Okay.
Going forward. Yeah.
Well, who else we got this morning?
So let's look at some gaming stocks, right? We got Electronic Arts and Take-Two Interactive, both reporting earnings today. Electronic Arts had a good quarter. They came in like $1.49 a share compared to the $1.17 that was expected. They beat on top line as well as the bottom line. They raised their full year outlook. They got a lot of strength in that sports themed game. That's kind of EA's forte there. And so they're trading up about a little over 2.5%. And then Take-Two Interactive, they did well also. They came in, beat on both top and bottom line. They beat by about 30 cents a share. They raised their outlook as well. And so they're up a little over 3% this morning. So
not bad.
Not bad at all, is it? Let's see, where do we want to go? Let's look at a little travel, maybe. Booking Holdings, which is, I never really could understand that one, but it's the Priceline, right? The parent company of Priceline.com.
That's right. I knew they rang a bell. I couldn't remember what they owned.
So they beat by almost $5 a share, came in at 37.70 a share. Revenue ahead. They, so far they're kind of shrugging off the whole COVID-19 thing as they're moving forward. They are trading up 4.3%. Now let's remember that one's always been a high price stock, but right now it's going to open at a new 52-week high at $25.40. Not $25, $2,540 a share.
Holy crud!
Yeah,
Priceline costs $2,500 a share.
Yep, it sure does.
Good Lord. Okay. I think I'd buy Berkshire Hathaway first.
So then we had Roku report. Roku had made some real headway into streaming and that type of stuff. They had a little bit of a rough quarter, Dave. They earned 48 cents a share, which was great because it was well above the 6 cents that was estimated. But revenue missed. It fell short of what the forecasters believe the company should have been reporting in revenue. And then they came out and issued lower than expected revenue forecast for the holiday quarter, which, that's never going to be good.
No.
Not as bad as Moderna, but still down over 7.5% this morning.
What they say the reason for that was, I know they're having a war with YouTube TV, but beyond that, they're getting built into so many TVs, even the little boxes aren't necessary anymore.
Yeah, it doesn't really say what the issue is, but with Roku, I got to think it's, where's their revenue coming from? I know they have their own channels. So are they building in some ad revenue? Or do they have pay services? Where are they what really is their revenue? And I've never really dove in deep to find out kind of what their streams of revenue are.
Yeah, it's interesting, as I figure that's almost becoming de rigueur. Everybody's got a Roku TV these days, it seems.
That's true. It does. I mean, I've got a couple of them.
Other indications, one or two more before we have to close.
So I have two, and we can wipe off my list. So we got Planet Fitness. They had a good quarter. They came in and earned 25 cents a share compared to the 7 cents they were expected. Revenue was ahead. They raised their full year forecast as well. And they're getting close to being a big winner too, Dave. They're up 10% this morning.
Cool. At
a new 52-week high, $91 a share right now. And then I'll leave you with the loser today. And we have Wayfair. Now, Wayfair, yep. Now, remember last quarter, they did really well.
Yeah, I remember.
But the revenue fell short of expectations this quarter. As people are transitioning back to spending money at more brick and mortar stores. So that's taken a little bit of an impact on them. And so they're trading down this morning almost 4%.
Okay, well, there got to be a loser in every bunch of winners, and I'm sorry it's an e-commerce company, but that's happy news for the brick and mortar folks. Markets yesterday, everything was up, some of them substantially. What happens this morning 45 minutes early? I'm seeing my numbers moving pretty quickly on my delayed quotes.
Yeah, I'm having to update my screen every now and then. It's not staying up with me. So here's where we got right now. We've got a mixed bag at the open. We've got the Dow actually negative about $16. We got the S&P 500 up about $5. We got the NASDAQ up almost $50. So more green than red, but we still got a little tinge of red in there. On the commodity side, we got silver taking a huge jump today, Dave, up 3%, trying to get back over $24 an ounce. Not quite there yet. Gold taking a big jump this morning, up at 1.6% to $1,792 an ounce. Well, and I got to keep on going, Dave. A big jump in oil this morning, too, up 2.4% to $82.78 a barrel.
Yeah, back in the range it was 2 days ago. It was just teasing us yesterday, I think. What do you think?
Yep, I think so. I think it was just kind of lulling us in.
Pretty much it. Everybody was happy overseas. Asian Rim market up by between 2/3 and a full percent across the board when they closed early this morning. European markets are looking at our monetary policy and saying, oh, goody. They're all up by about 0.5% halfway through their day as well. Keeping track of what's happening with one's IRA counts for a lot. If you're young, there are a lot of opportunities for growth. If you're getting close, well, stability counts for a lot. How do I find you to tune in my strategy?
Dave, they can give us a call at 863-382-0037 to schedule a time that we can go through our core retirement design to help them design the retirement they always dreamed of. Join us on the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730. And now you can listen to us on FM 95.3.
Absolutely. And back here again tomorrow morning on Light FM as well. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day, and we'll close out the week tomorrow.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. You toss a penny.
Hey, folks. Again, I want to thank you for joining us today, as tomorrow we head into the last day of the week, and it'll be the end of the first full week of November. I hope you'll join us then for Statler Financial Radio Show. Join us tomorrow, same time, same place. Until then, have a great day.